Nobody loves to pay taxes. Actually, that's a universal statement. There's some proud American out there that loves to pay their taxes, but that's not you listening to this show. You want to make sure you handle your business and make these estimated tax payments so you don't end up in a position where you owe the IRS and you cannot pay them. You want to make sure that you're proactive so that you manage your cash flow versus reactive and getting letters from the IRS where they've levied your bank accounts because you didn't go ahead and take care of business and make these estimated tax payments.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, let's talk about the real reason you're here. The reason you've tuned in to the Tax Relief with Timalyn Bowens podcast. Why do you owe the IRS? See, there's one main reason why people owe, and simply put, you didn't pay enough in taxes. I can't tell you how many times, and no, I'm not using that as a cliche. I literally cannot tell you how many times I receive a DM, an email, sometimes people crossing those boundaries and sending a text message with this concern. I just started my business. I made less money than I made last year. How in the world do I owe taxes? How do I owe the IRS? And that's what I'm going to talk about in this episode today. For episode 21, we are talking about estimated tax payments. If you are a business owner, please take the time right now to get your pen and paper. But here's the thing. This isn't just for business owners. I have clients that I work with that owe tens of thousands of dollars because they should have also made estimated tax payments and didn't. So we're going to talk about what estimated tax payments are, who pays them, how you can pay them, and when you need to pay them. So let's get right to it. I've explained this before in other episodes, but maybe you're new, so I'll explain it again. The U.S. tax system is a pay-as-you-go tax system. That means the IRS isn't going to let you run up, or I should say, the IRS doesn't want to let you run up this huge bill and have a tab that you have to pay at the end of the year. No, they want it so as you're earning money, you're paying taxes on that money. Now, in this world we live in 2023, not everyone has had a W-2 job. But for those of you that have, let me use this analogy. When you have a W-2 job, you fill out your W-4 and you let your employer know how much you would like withheld in taxes. All right? You may be thinking, well, I didn't write a number on there. The way you filled out the box when you checked your filing status and you signed it, it told them how much to withhold. Every paycheck that you got, unless you switched that W-4, had taxes withheld. You were paying as you went along throughout the year. When you become a business owner, that responsibility to pay as you go doesn't go away. You're just the only one that bears the responsibility because you don't have an employer that's going to make those payments for you. So estimated tax payments are required quarterly. All right. Now let's look at who pays estimated tax payments. These are going to be for our sole proprietors. And keep in mind, if you are a single member LLC, the IRS does not recognize a single member LLC as a tax entity. The IRS sees you as a sole proprietor. So if you're a single member LLC, yes, that means you too. The sole proprietors are also people that do DoorDash. If you are an insurance agent, if you're doing Uber or Uber Eats, all right? If you are working any type of position where no taxes are being withheld and you know you're going to get a 1099 at the end of the year, you are a sole proprietor. Also, partners and corporations are required to make estimated tax payments. Now, you are going to make these if you expect to owe $1,000 or more at the end of the year. Please note that if you got a refund last year, that doesn't mean that you didn't owe $1,000. It just means that those taxes were paid throughout the year from withholding, or maybe you had credits that were able to be applied. There is a difference between your tax liability and your actual tax refund, okay? I don't have time to dig into that too deep, but I do have a blog on my America's Favorite EA website that you can check out. You want to go to www.americasfavoriteea.com, and it's 15 tax terms every taxpayer should know. I break down the difference between the liability, refund, and then 13 other terms for you. So if you expect to owe the $1,000 as a sole proprietor or a partner, then you are expected to make estimated tax payments. That's $500 for corporations. That threshold is a little bit lower. Now, keep in mind, when we're on this podcast, we're looking at everything from a federal lens. States do also require estimated tax payments as well. For example, I live in the state of Kentucky. They have their own system. You want to make sure that you check with your state's Department of Revenue, because the only thing worse than dealing with the IRS is dealing with the state Department of Revenue. All right? Now, you may be thinking, okay, I have to pay taxes. You said I have to pay them quarterly. How in the world do I figure out what to pay for these estimated tax payments? My personal recommendation is to hire a professional to calculate them for you. That is my straightforward, honest gut answer, because you don't want to mess these up. Now, this is not included in tax prep. This is a different calculation. I will give you that warning. So if you're thinking, well, why didn't my professional automatically give those to me? Well, you didn't automatically pay them for it, did you? So you want to make sure you have that conversation to get that figured out. Now, if you're a DIY person, that is absolutely fine. You'll hear me say on the show, I'm not going to be the judge of your tax competency. To figure them for an individual, you will need Form 1040-ES, all right? With that, it will walk you through making an estimate of what your projected income will be. If you're self-employed, that partner, it will also help you take into account self-employment tax, which you can figure with Form SE, and that will walk you through what is projecting that you will owe, and also provide you with 4 payment vouchers if you'd like to make your estimated tax payments via mail with a check or money order. Don't send cash. And as of right now, the IRS doesn't take Cash App or Zelle. So you have to write that check, money order, and the voucher will also give you the information that you need to include on the check. If you're a corporation, you can use Form 1120-W. Same process. It'll walk you through your projected income and how much you should be making quarterly. Now, you don't actually turn in the worksheet to figure out your estimated tax payments. I have people ask me, hey, can you help me file my quarterly taxes? You're not actually filing a form unless you're writing the check, and even that's a check payment voucher. That's not a form you're filing. You only are required to make the payments quarterly. For federal estimated tax payments, you're not filing a form quarterly. Okay, I want to make that distinction because I know a lot of people get confused by that. Now, I've said this in previous episodes, but check this out. The IRS isn't going to tell you that you can't pay them. If you're transitioning from W-2 employee to being self-employed, one of the things that you can do, you can go ahead and make those payments to the IRS every 2 weeks, every month, whatever you need to do to make it easier for you. Because I will tell you, waiting a whole quarter to make an estimated tax payment and you see how much you're paying in taxes in that lump sum, it hurts my little feelings every single time. And I try to make sure I keep up with it before the quarter is out, because it just hurts to see that much money at one time go out of your bank account. So that is also a way that you can make sure those payments are in. If you are still at a W-2 job, you can also adjust your withholding to do the extra amount that needs to be paid. Now, if you've been following me for a while, you know I have a YouTube channel, America's Favorite EA. I actually have a W-4 series that I'm doing right now, and you can go check those out on how to adjust your withholding. All right. Now, like I said, these are due every quarter, required. You can pay them, like I said, in smaller increments or even before. First quarter of the year is due April 15th. Yes, on the tax due date, not only does the IRS want you to file your return and pay anything, they also want you to go ahead and be getting ready for the next year. The next quarter is due June 15th, third quarter, September 15th, and then for the fourth quarter, that payment is due on January 15th. If these dates ever fall on a holiday or a weekend, then it will go to the following Monday. For example, this year, which right now is 2023, the fourth quarter payment for 2022 was not due on January 15th because it fell on a weekend. Then that Monday was Martin Luther King Day observed. Then it went to Tuesday, January 17th. So just be mindful of that. The actual due date will never fall on, or you won't be obligated to pay if it falls on a weekend or a holiday. It will go to the next business day. So we have a few ways that you can make this estimated tax payment. You can do it online through the EFTPS system, which is the Electronic Federal Tax Payment System. You can sign up for an account at irs.gov, or you can pay with your bank account. You can make a payment with a credit card. Also on YouTube, I have a video on how to make that payment with a credit card. If you go to the blog on americasfavoritea.com, there's also a blog article that shows you, it walks you through how to make that payment with your bank account. As I mentioned before, you can use a payment voucher and mail that payment in. With the voucher, it gives instructions on where you should mail that based on where you live. You can also use the IRS To Go app to make this payment. Now, the IRS still lists that you can make the payment by phone, but if we're looking at fees, if you want to avoid those, you're going to want to pay with a voucher, with a check or money order sent in, or you're going to want to pay with your bank account. Now, you may be thinking, you know what? I'm not making these estimated tax payments. I'm going to stick it to the man. Listen, if you don't make these estimated tax payments, you will owe. Life happens. If you have an emergency and you have the money sitting there, let's say it's a medical emergency. Are you going to pay your medical bill or the IRS? I will say 97% of the time, and no, I don't have any data. I made that up. But my gut would say 97% of the time, you're going to pay that medical bill. Nobody loves to pay taxes. Actually, that's a universal statement. There's some proud American out there that loves to pay their taxes, but that's not you listening to this show. You want to make sure you handle your business and make these estimated tax payments so you don't end up in a position where you owe the IRS and you cannot pay them. You want to make sure that you're proactive so that you manage your cash flow versus reactive and getting letters from the IRS where they have levied your bank accounts because you didn't go ahead and take care of business and make these estimated tax payments. In addition to owing, you'll also get hit with an underpayment penalty. The way to avoid this penalty is you want to make sure that when you file, you've paid 100% of the tax from the prior year, because we're business owners here, right? Ideally, our income is going up each year. So if in 2022 you go to file, all of the taxes aren't paid, but you have all of the tax liability that you owed in 2021 paid, you can avoid the underpayment penalty. If that's not the case, but you have 90% of the current year paid, you can also avoid the penalty. And the IRS is actually pretty lenient here. You can look at whichever one is smaller, not larger. So let's say that you owed $10,000 this year, but you were able to pay $9,000, you can avoid the penalty. All right. Now, we went through a lot here. You may be thinking, okay, I take care of my business. This was good information. But guess what? Everybody doesn't. And that's why 1 in 50 taxpayers has an issue with the IRS. Now, some people may not honestly know why they owe. Some people may just be hiding their head in the sand. Will you do me a favor? And you know it's coming. Would you not only like and subscribe to the podcast, will you share this out? 1, you're going to help a friend. They may not come to thank you today, but 2, you're going to help me fill my mission of filling the tax literacy gap 1 taxpayer at a time. And I will tell you thank you today. And we want to make sure we get this information out because back taxes shouldn't ruin your life. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.